at the structure of XAUUSD. So trading has gone from strategy to patience. Now, why I say patience is very important is that you see, selling might not come here, but when we want to follow real advanced retail trading strategy, we allow price to play into structure. Like you see what I did here, after I cloned that floor, it gave me that roof. And everybody who was thinking that gold will rise to the moon yesterday got got slapped on the face because the market has already been programmed to be this way. I'm showing you market programming. This is mathematically engineered. This is pure mathematics. So if you look at what happened yesterday, you'll see that so despite all the grammars we speak as traders, those fair value gaps, smart money, smart concept. Look, this is mathematics. This is pure mathematics. If you see what I did here and you're still doubting it's mathematics, it's not mathematics, come to the comment section. Let me know your grievances. Why you think trading is not mathematics. So you see what price have done yesterday after the break of that this is a supply roof, break of a supply roof, create of a structure, price returned back and provided a buy at 4029. 4029 is also a daily close. If you look at it from the line chart, you see that on daily, yesterday candle leveraged on that level. 4029 is a daily close. 29 is a daily close. That's a daily TF. You can see it 29.28. So most likely price will come back there. They will go back to 15 minutes. So price might likely want to do us a favor. That would be a big favor if price comes into a daily floor. If it comes into a daily floor, mathematically, it shows that we could have a reaction back at 28. So that would be that might be a final call or a continuous break. So set your buy order. This is not a financial advice. This is just for educational purpose only. So price, I'm anticipating it will come back to test a daily SR. So a pushback into daily SR honestly will give us a leverage. It's not far from me. That's 200 points. So let's hope and see. It might come, it might not come. I've seen oftentimes when you wait upon price and it doesn't come. But considering the amount of people that have lost position to other buy positions, and so it's most likely that it could come. If it doesn't come, I'll forget about it. But I've become, I've learned to be very, very stubborn and stay resilient on what I believe. And I've seen every time I change my mind, the result I get from changing my mind. So let's see if we stand firm, stand on our ground, and allow price to come back to 28. 28 is a daily floor. 28 is a daily floor. That's a daily floor. Let me put it up. And another thing which we must know in trading is that there are signs. And every time we ignore signs, remember what they say? If you ignore signs, you'll see wonder, and wonders never end. All the price action you see here, all this sell you see here are from here on 1 hour. If you look critically, you will see price has created a strong head and shoulder, a reversal price action. That reversal price action, you see it better on a stronger intraday time frame, which is 3 hours and 4 hours. On 2 hours is a clear head and shoulder. This is the left head, this is the right, and this is the shoulder. And every person who has come to test it on 2 hours face the same fate. They all face the same fate. July candle on the 27th came and dropped. We had FOMC. FOMC came and rejected it completely. And the day after FOMC, they also came, tried it, and they also failed. So to look at it from a broader perspective, you see that price has created a descending trend line here based on the current structure. We see price create the demand floor 1, demand floor 2, and leveraged on it again. So let's allow it to do its thing. It's falling under the power of a bearish price action, a head and shoulder pattern. He's not the first person falling from it. This is the first person. This is the second person, FOMC. This is the third, fourth, fifth, and market has dropped. And you saw that on 2 hours after we broke a key critical support structure at 85, market has come to retest it and initiate a sell from there. You can see what happened there after price testing it. So if you are awake, you catch that move. If you are sleeping, you are not going to catch it. And if you set an order, how do you know market will break here? So you need to be awake to see it for you to catch it. So you see what price did here as a resistance structure, support structure, and the price broke it. Look at the candle that broke it after our price came back around 6 and came retest it, and we are seeing a drop. Potentially we are coming to daily floor. Daily floor is 28, 28, 29. Hold your ground firmly. Hold your ground there firmly. Don't let anyone talk you away from there. No matter the guru, don't let them talk you away from that level. Hold your ground very well. Hold your ground at that level. On that level, you have a valid point. You have a valid point on that level, even up to 22. So anything from 28 into 22, hold your ground firmly. Because if you look here on 22, we also have a very strong daily 4-hour support. There is a strong 4-hour support at 20. So you can give it a grace of 20. So if you reduce your lot size and allow yourself to march into 20, but if you want to be extremely nonchalant, allow price to return to the current descending trend line. A return into the current descending trend line will take away the current high, the current low, which we enjoyed yesterday. So if you want that to happen, then you are looking at 3,982, 3,980 New York time. New York time. Only New York could do that. Only New York, where the city never sleeps. So if you allow it, and you see that structure here, support structure, resistance structure, support structure, price peak liquidity on a descending trend line, there is a very high probability that it will seek liquidity at 20. So 4020 is liquidity for the buy. So price might dip itself into liquidity. 4020 into 4020 into 4020 29. That's an expected area for demand. So allow it. If it doesn't come, no problem. We'll look for another opportunity. But this is what I see, because if you don't want to be patient, most likely you are going to see a lot of wonders. But if you are tired of seeing wonders like me, then you must be very, very patient. I don't like wonders. So these are key areas. 20 and 29 are areas that if you stand firm. You are standing based on principles, based on your understanding of trading. So when you stand on it, you stand firmly, and don't let anyone talk you out of it. So let's see if it comes to at least retest this yesterday low. A retest of yesterday low will also result in a technical buy. It may not be a strong liquidity buy, but you'll see a buy reaction that will give you maybe 100 pip, 200 pip, depending on your risk appetite. Depending on your risk appetite. So in 15 minutes, we are looking at it, and we're having so much cluster. Honestly, the ideal thing is to wait for price to return here. The ideal thing, that's the professional thing to do. If you are someone who really want to play based on the daily price action, then the right thing to do is to wait for price here. That if you cannot wait and you just want to make an experiment in the market, you want to feel the market, you want to know what the market does at any time, a retest of yesterday 28 is fine. But that retest might come with a price. Market might come there and want to take it out. But if you also look here, there is a deal here on this roof. But this is not a buy structure. This is a breakout. And you see prices on 852. Price could react. So let's look at it on 30 minutes. On 30 minutes, it looks like what it should be. And that's from here. You see have here support structure. We have here as, and this is where market opened on Sunday. So market could be upset at that level, seeing that it has used it as a foundation for buyback. Market opened in a gap and close on that day, and you have seen that level return. So it could technically 52 could technically just be what you are not expecting. I know nobody expects it, but it could be what we don't expect. But if you look at what price has done there on Sunday market open, and we have seen what 52 level did, that could be a reason to look out for what the market wants to do. But I see technically that it wants to break there. It wants to break there. It wants to break there. So this is what I see the market doing. That's tapped into 49, and you see what price did here, and it could break it and continue. This is on Sunday. Market closed on Friday, opening a gap. That was a potential floor. And you see when price came back, played with it, it became a resistance after break of the 49 level. 49 level, break of that level. But the actual level is 49, where price is reacting now. It became a supply roof. And when we broke the structure, return back, price took liquidity at 44, which is 5 points away from the current structure, still within the zone, and we have leveraged on buy. Then the most important thing to see here is the rejection at this level, what it has done, and price return here. There is a probability that the 49 level could push price back. There is a probability for that. And but for me, outside that, to follow market structure the way it is to allow price retest yesterday low or break of yesterday low, then align with the strategy. My strategy is buy from the break of the previous low and sell from the break of the previous high. That is the strategy. So sometimes you can go against strategy, but when you go against strategy, you are going to learn a new thing. So that is what I see technically. So 52 honestly could push based on what we have here, or it might fail. But the ideal thing is to wait for price to return to daily floor. Daily floor is 28, liquidity is 20, which I've already listed out. So if it does that, that is just perfectly fine. And if it doesn't, it's still okay. So that's what I see for now. And the 1 hour candle ends in 13 minutes, and it's not showing a strong sign of rejection. It's not showing a strong sign of rejection. On 1 hour, where you see a true buy based on the FOMC candle reaction is here. The line chart close for 1 hour is here at 44. So at 44, you could see price return the same gesture as it has done before. 44 is a very strong level based on the current price action in the market. This is FOMC related after we had a breakout, and you have seen what happened. So for me, it will be okay to wait for price at 45 level. 45 level is very good based on what price has done. But from where it's also reacting from close of market on Friday, it's valid. It's valid, but the right thing to do is either you wait for price on this level 45, or you wait and do the right thing at the current low, which is a daily SR at 29. I said liquidity is 20. 420 is liquidity. And if you're a professional trader and you don't want to risk your liquidity due to assumptions in the market, then you allow the strategy to align, break of the previous low, price return here. I myself, I love here. But you see, sometimes market don't always respect. So it can't go from where it is now. It's doing that because of the market gap. Market gap is doing so. If you look at it on 1 hour, look at what price have done. So if you see that structure from there, if you are using your if you are basing your argument based on what market did here, that's a potential reason to buy back. If you are basing your argument from what price did here, this is close of market and market opening a tremendous gap. And if you look, price has returned there. So if the current 1 hour candle close above the line chart close of that 1 hour that gave birth to that, that could likely be a bullish move. So you could see, depending on how it closes, depending on how it closes. So you can see that it's possible that price will move from here up, or it will continue to drop and return into FOMC floor. The FOMC floor is also a very strong floor. If you look at it, if you look at it logically, the floor is very strong. So I do like FOMC floor. Let's be very honest. Look at what price I've done here. Resistance structure, breakout of structure, demand floor one, and price came, respected it yesterday, broke out of structure. If price comes back there, that's also another good point to look at it. But you look at yesterday rejection. Yesterday rejection was at 50, so market could be using 50 to move. But I think market will seek for broader line chart close on timing. So it's possible that that bounce might not really be what you need. Price might return back to deep into FOMC Wednesday low. Today is Friday. It's a liquidity time. It's going to be very volatile. So if you pull back into here, you'll see that. So the ideal thing is you either wait for yesterday low or break of yesterday low. If we break yesterday low, then you want to align with Wednesday objective, which is on the descending trend line, where you have the real liquidity 3,980, 3,984 New York time. So this is how I analyze the market. Shavyfxhub. Bye for now.